What is going on, everybody? Charlene FX back here with SIMPLEFX, dropping another YouTube video for you guys today. We're going to be talking about one of my favorite topics, which is indicators. Indicators, good old indicators, and why I don't like them, why I do not care for indicators, why I don't use them. I'm going to talk about a couple indicators, popular indicators that a lot of traders use right now. Talk about why I don't use them, why they did not work for me, and let's get into it. Okay, guys. So we're gonna start out talking about, man. You know what? I'm gonna give you guys an example of why I don't like indicators. Okay, first of all, let's talk about what indicators are. Okay, it's just that, an indicator, something to indicate that something is going to happen in the market. Indicators are created, they're made to be like a little assistance, a little cheat code, like a cheat code, if you will, to basically give you a little bit of insight, advanced insight on what's going to happen. Okay, something that it's going to happen in the future or that's currently happening in the market, something to give you a bit of an advantage to to be able to predict the next trade that you're going to take or what the next move the market is going to make. So a lot of traders, they like using indicators because they feel like it gives them an advantage. And a lot of the time, my experience with indicators basically is that a lot of them, they either lag or they don't work, or they're a little delayed in what they're telling you, or they just basically confuse you. They confuse the crap out of you because you could be looking at the market one way and you throw an indicator on your chart, and the next thing you know, the indicator is telling you something different. So now you're thinking, do I follow my own analysis or do I go with the indicator? And the indicator is meant to kind of be used in confluence with your other analysis that you do on your chart. So you can't just take one indicator or one confluence and run with it. You kind of need like a combination of confluences to come together to tell you if your analysis is right, if your prediction is right, and whether or not you should even take a trade or if you should just watch it. Okay, when I first started trading forex, I did use indicators. I used Fibonacci, I used EMAs, moving averages, trend lines. I used everything pretty much. I did dabble with the RSI bands. I never used harmonics. I never really learned how to use harmonics too much. What else? Bollinger Bands. I never really used Bollinger Bands. I did see it, a little bit of how to use them, but I never really was taught on how to use them or what it really did for your analysis. Trend lines I also used, and I did study a little bit on divergence, but that confused me way more than anything else. So like the first a few topics on divergence, I just stopped because it was just sending me in circles. So using indicators, I think if you learn how to use them properly, they can be a big help with your trading. But if you're not taught on how to use it the right way, because a lot of times with indicators, you are setting the settings for them. In other words, if you're using, Fibonacci, you have to set up the levels. You have to set up, the colors that you put on it. You have to set up the lining, the spacing, and all that. A lot of the stuff that you use on your chart, you kind of have to set up. And when you're placing these indicators on your charts, you are placing them somewhere based on what you think is the right place. And different people use the same indicators in different ways. So it's all relative to that trader and how they choose to trade. A lot of traders will use the Fibonacci, like they'll put it, swing high to, swing low. But to me, a swing low could be right here in this area. To somebody else, a swing low could be, right here. Sometimes they put them at the bottom of the wicks for swing lows and swing highs, but what if someone puts it at the bottom of the body, where the end of where the bottom of the candles are? Or instead of putting it at the top of the wick, they put it at the top of the body. Okay, and you're looking at different levels. What's your take profit? Just take profit up here, take profit up here. What levels do you need to look at to find retracement? All of these are price reversal zones. So which one do you need? Well, you have to go off of what someone tells you is the price reversal level. Okay, a lot of popular price reversal levels are the 61.8 price reversal level. Another one is the 38% price reversal level. A consolidation level is most likely the 23% level, and then so on and so forth. So if you're looking at this Fibonacci, if you if you don't know how to use it, but you see other people using it and they're having success with it, and they're telling you, yeah, place it at the swing high to the swing low, or the swing low to the swing high, follow your trend line, because your trend line is going to tell you what direction it's supposed to be going in. And then you need to see some sort of reaction at the 38%, or you need to see a reaction to 50% or 61%, or if it comes up to the 76 or 100, that it's a complete reversal and the trend is broken and you got to look this way, that way, da-da-da. Oh my God. And what if you stick to, let's say 61%. They say 61% is the golden level. That's the level that you want to see some sort of reaction on. That could be right, but if you don't place the Fibonacci properly on your chart, whatever properly means, whatever that means on your chart, then you probably won't see a reaction here. You might have placed it wrong, and 61% would have been down here, where up here you don't see any reaction, but down here you do. You see a whole bunch of rejection up here, and some resistance being formed here, and then you see a little drop here. Over here, the 23%. 23% supposedly in the traders world is known as a consolidation area, where price kind of ranges before it makes a move. Okay, but if you look here, it made a move here and then it dropped right at that level. But that's because this is where I have my Fibonacci placed. Okay, guys, so it can be very confusing for you. I mean, this is obviously, you can see with your eyes that this is obviously a downtrend here. So there's no confusion with where the market is going on this time frame. But you're not going to take a trade on this time frame. We're looking at the daily right now. You are not going to take a trade on the daily time frame. You might plan your trade off of that, but you're not going to enter a trade off of that. You're going to enter a trade off of the 30-minute, 15-minute, 5-minute, or a lower time frame. So what time frame do you place your fib on? What time frame do you place your fib on? Yeah, you can place it on the daily. Then they say, yeah, let's drop down to the 4-hour. You can place it on the 4-hour as well. And yeah, you can place it on the 1-hour. You can place it on the 30-minute. So if you're thinking about where you're going to place your Fibonacci, okay, so now we're over here. All right, so let's lift this up a little bit. Look how huge this level was just on the daily chart compared to the 4-hour chart. Okay, we're going to get rid of this fibs here. We're going to get rid of all this junk over here, okay? So we can move forward. All right, so looking at this right here. Let's say we're looking for, some sort of setup on the 4-hour so we can drop down and take it. Well, price broke out over here and now it's coming back down. So where do I want to place my fibs? Okay, I'm going to place my fibs, swing high to, let's say, swing low. Okay, let's make my swing low down here. You put what? Oh, some people might look at this and say, oh, swing low is right here. Let me put my 25% on my last line there. Negative. You got to put your 0 there. Why? I don't even know why. It's a good question, Charlene. Why? I don't know. Somebody told me to put that there. I'm being so serious, you guys. Like, this is how a lot of times people are taught. They're just taught to use it the way the next person uses it, and supposedly if that person's having success with it, that's what you're supposed to do. So you put your swing high up here, swing low, wherever you think that is, put your 0 where you think that is. So let's put this, down here. Let's go wick to wick, wick to wick, okay? And then let's look for some sort of reaction on the 61.8%, okay? So we're coming here, make this a little bit lighter than it was before, and we're looking at this level right there. Is it 60? No, this is the 81%. This is 61%. Where'd it go? Oh, it is. Okay. So, okay, it was covered up. So this is the 61% level. We see some bouncing around here. Where do we see? A long candle get rejected and come down over here. So I guess if you were a good Fibonacci user, you would know that this line right here is telling you, oh, well, there's strong reaction at this level. Now you're supposed to enter the trade and write it on down. Guys, please don't do this, okay? If you are not properly trained on how to use an indicator such as Fibonacci retracement, and you haven't had success long enough with it, don't rely on it. don't rely on it. There's plenty of courses and um, people out there that use it, that teach it really well, and that use it and swear by it. And I'm not saying it's a bad indicator. I'm not saying you can't use it. I'm saying if you are not very good at learning and applying technical analysis to your trading, then indicators like Fibonacci will not help you. They'll serve to just confuse you even more than you probably already are. Okay? And then another thing about indicators that I really don't like is that people tend to rely on indicators when it comes to trading. They throw market structure, price action, they throw all that right out the window. They don't even look for themselves to see what the market is doing. The only thing they look at when they look at the market is whether it's going up, down, or sideways. At that point, they don't know nothing else. They're like, okay, I see the market is going down, or the market is going up, or the market is going sideways. All right, so now let me grab a couple of my indicators. Let me grab a couple indicators and let me start throwing them all over my chart so I could have an idea of what trade I'm going to take, where I'm going to enter at. And it just, indicators sometimes they handicap people. They handicap the traders to where you feel like you have to depend on the indicator. Otherwise, you don't even know how you're going to take a trade. If you cannot just look at a chart, just look at a chart, look at the candles, find your support and resistance levels. And mind you, support and resistance levels are indicators in themselves. People forget that at times. A lot of traders forget that support and resistance are indicators. Price action is an indicator. Market structure is an indicator. These are all indicators in themselves. And they're the most accurate indicators because they are legit telling you what the market is doing. You're not putting the indicator on the chart. That indicator is creating itself in real time. So you don't need an indicator to tell you what the market is going to do. You think you do, but you don't. You think you do because you see other people doing it, but you don't. Okay. There's candlestick patterns that people also rely on. Like a popular one is the head and shoulders pattern. Okay. If I can draw it out here for you guys, boom, left shoulder, head, right shoulder, boom. Okay. And people will have this on their chart, and what do they look for? They look for something called the neckline. This would be your neckline right here. Okay. Once you see this head and shoulders form, the neckline needs to be broken. The neckline was broken here, and this right here is your this little area right here is your retest. Okay. This is your retest. This is a popular, very popular candlestick pattern. It's very accurate at times. I've seen it a lot of times play out, and it is very, very, very accurate. Okay, a lot of times. Okay, it does play out properly, and it plays out on the bigger time frame, plays out on the lower time frames, on all of them basically. Okay, you have the head and shoulders, you have double tops. Something like a double top would be something like this. This would be a double top where you have two candles or 4 or 5, whatever, however many candles come up and wick out and form a top here and a top here. Usually double top candlesticks are a bearish reversal pattern where the tops are formed at the top, and then it's going to turn into a bearish market at that point. It also comes down to retest and then drop back down. Okay, same thing for head and shoulders. You have an inverted head and shoulder. Like, let's see if I can find one on here. Basically, inverted head and shoulders is head and shoulders upside down. So this pattern right here, you would see it kind of flip mirrored on the bottom of a candle thing here, and that would tell you that the market is going to be reversing to go up into a bearish market. The regular head and shoulders is going in a downtrend to a bearish. The other one is going to a bullish. Okay, but let's go back and talk some more about some indicators. Okay, so let me throw some stuff on here so you guys kind of have an idea of what I'm talking about when I say I really don't like indicators. Okay, so let's say I have this on my chart like this. I'm just going to randomly put stuff anywhere. Okay. And then I'm going to do this. I'm going to do this, all right? I'm going to have this here, this right here, right here, right here, right here, right here. Okay. I put one down here somewhere, put one right there. All right. And let's just throw one more for good luck right there. Okay. Then I'm going to come here, right? Take my trend line. I'm going to draw a trend line from here to here. I'm going to draw, another one from here to here, like that. All right, and then I'm going to draw some zones up here. I'm going to draw uh, put a zone up here, right? I'm going to draw another zone, let's say right here. Okay, let's draw one more zone here, all right, for good measure. Boom, just like that. Okay, what do you guys see here? A whole lot of mess. Okay, if you're thinking mess, that's what you see. A whole lot of mess. Believe it or not, this is what a lot of traders' charts look like. It looks like you gave a 5-year-old a box of crayons and a piece of paper and told them to go ham. That's what it looks like. How do you even know how to take a trade in here? How do you know what you're looking at? How do you know if you're buying, if you're selling, what the market is doing? You don't know anything. You don't know a damn thing on this chart. You say, yeah, I see this, I see that. I got my lines here, I got my zones here, my support resistance here, I got my Fibonacci right here, I got my EMAs right here, MA right here, da 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 da, blah 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 blah. Man, how do you take a trade in here? What are you looking at? What are you trying to do? What are you trying to prove? This looks like a bunch of mess. It doesn't look like anything to me at all. And believe it or not, guys, this is what my chart used to look like. This is what my chart used to look like. I used to have so much, I can't curse on my channel, I want them to be monetized, but I used to have so much crap on my charts, and I didn't know what I was doing. I didn't know what I was looking for. All I know is I was doing what I thought was right. I saw everybody else doing. I didn't understand what any of it meant. I was just putting stuff where I thought it belonged. I was drawing lines everywhere. I was trying to figure out what the market was going to do. I didn't know where I was going to take an entry. I didn't know if I was going to buy. I didn't know if I was going to sell. I didn't know anything. I just knew this is what I saw people doing. I was trying to understand why I was putting these things where I was putting them, what I was using them for, what they're used for, what levels should I look for, what are my key points, what should I be labeling? Guys, I was running around like a chicken on my head cut off. And I'm not the only one. A lot of traders, you pretty much have to go through these motions and this phase of having a bunch of crap on your chart before you actually learn that you really don't need much of it. You really don't need much of it. Okay? So guys, this is why I don't like indicators, because I feel like, again, they handicap people. They clutter your charts. They fill your charts with so much mess, so much stuff that it just confuses you. It confuses you. It makes you second guess yourself. If you saw a sell initially, you throw this indicator on there and it's telling you to buy, or you label something over here and then you wait for something else to happen and something else happens, and you're putting yourself through unnecessary stress, unnecessary grief, and trying to make something that's already complicated like Forex even more difficult to work with. If you use your eyes, if you use simplicity, okay, simple things, simple indicators that the market already gives you, such as candlestick analysis, such as market structure, such as price action. These things are all you need to get accurate analysis of your charts and how to take a high probability trade. A lot of indicators will not give you high probability because the charts are relative to whatever is happening market condition wise. So anything can happen, but if you leave let's say you throw fibs on your chart and you're looking, let's take all this mess off here, okay? Let's say you throw fibs on your chart somewhere. I'm going to use fibs because that's the one I'm most familiar with, and so I used to use a lot, okay? So let's throw fibs on here, okay? Swing high to swing low, okay? So let's say we have this on the daily time frame, okay, and we're looking for some sort of movement. So let's say the market is in a downtrend and I'm looking for a retracement for it to come down, okay? And let's say you were told the retracement needs to happen at the 38% retracement level, price reversal level, okay, 38%. Let's say by the time you put your fibs there, this already happened. This already happened. So you know what? This is irrelevant. these taps here are irrelevant. You're looking for price to retrace, come to this level, and then drop down. And if you see some sort of bearish engulfing, that's where you know to jump in the market and ride it on down. Okay, so let's say you place your fibs on here and you're waiting for some sort of price action to come back up here to this price here, and it never does. What if it doesn't do it? Now you have to, okay, well, it never came back up there, just continued on down. All right, so let's adjust our fibs. Okay, let's drop down, let's say the 1 hour time frame. Okay, we go to 1 hour time frame, and now the market is in a bullish trend. Went from a bearish trend to a bullish trend. Okay, so what we're gonna do, we're gonna pull out our fibs again, and we're gonna put from swing low to, let's say, swing high. Okay, and we're looking for some sort of retracement where 61.8 level. Why am I picking 61? Because that's what they told us price needs to come to. 61, if it comes to 50, that's neutral level. 32, I don't know, that's the strong level. That's just the rules of it. Comes down 76 and below, then that's just a complete reversal, and it's a low probability trade. So now I drop down to the 1 hour time frame, all the way down from the daily. I'm looking for a reversal here. I'm coming right here, and I don't know. Is price going to come here? And obviously it did not come. Okay, just continued on up. Reverse at the 50%. 50%, which is what? 50% is, they told me this was the consolidation level. There's nothing should happen in this level here. I would lose my mind. I would lose my freaking mind, guys, because you are betting on an indicator that you have to place somewhere. You don't know what the market is going to do. None of us do. Nobody knows what price is going to do. Nobody knows what structure is going to do. All we have is our eyes to look and see what's in front of us, and then predict what we think is going to happen based on what's happening in front of us in real time. So if you're placing something on your chart, you have to place it in the exact perfect spot, and you're labeling your numbers, you're placing it has to be perfect, and you have to basically hope and pray that price does what it's supposed to do at a certain level, because price could react at this level, could react at that level, could react at this level, it could react at that level, it could do whatever it wants to do. You have no idea what it's going to do. So my thing is, when people are using indicators and they're not successful with them, but they continue to use them, what are you hoping to get out of it? Are you expecting to get better at it because you continuously use it, but you don't even know what you're doing wrong? People can use different things to make them, to use them to their advantage, to where it works for them. That's why I say a lot of indicators are sort of relative, because it's all about how you use them and where you place them in direct relation to your trading style. So I stopped using indicators simply because all they did was serve to confuse me. There were times where I would use them in confluence with my other indicators, but they were right. But even when I was right in a trade, I didn't know why I was right, because I was doing the very same things on the trades that I won that I lost on my trade. So you have to look at it like, man, if I cannot understand why I am right about where I placed this indicator and what the indicator told me, then you shouldn't be using it, because at that point you're just lucky. You just luckily won a trade. So to me, if you're using indicators, you need to know how to use them to a T, and you need to see consistency with them. If you are using an indicator and you are not consistently winning trades by whatever strategy you're using with them, then I suggest that you toss it and find something else. Give it enough time, but toss it. And with me, me being a very impatient person, I just did not care to continue rolling the dice with these things, because that's basically what you're doing when you don't know what you're doing with indicators. You are basically rolling the dice here. Okay, I just clicked on indicators up here. I haven't clicked on this in so long because I don't use them, but if you guys look at this list, guys, look at Bollinger Bands, shaken money flow, oscillators, commodity indexes, divergence indicator, oh man, I talked about that earlier, Donchian channels, double EMAs. There are the EMAs right there. Okay, you put EMAs on your chart, and If you guys look, I now have some lines on my chart. You'll see some traders have some lines on their chart, and they say, well, if market goes, if the candles are above this line, it's telling me to continue to buy. If the candles go below the line, then I need to sell, and blah blah blah, and all of that. And I mean, if you ask me, all this line is doing is just mirroring these candles. If you follow this line, let me take this Fibonacci off of here. If you follow this line, you look at, it's just following. I could do this myself. What is this line telling me that I don't already see with my eyes? But people feel like they need them. They feel like they need them on their charts. Okay. ADX, the ADX, average directional index. Okay. That's something I used to use also. Didn't do anything for me. And a bunch of these I've never even heard of. One of them that I've always been curious about was the harmonics. Not that I'm actually ever. I don't even see it. I don't even see it on here. So yeah, but if you guys look, man, there's so many indicators, moving averages, stochastic. My God, it's amazing how many indicators they have. Some of these, like I said, I've never heard of. I've only seen the pivot channel. I've heard of that. Pivot reversal, yes. Pivot points, yes. But these things just really only serve to just kind of confuse you. Okay, you're gonna have all these lines. You're gonna have Fibonacci. You're gonna have your support resistance levels. You're gonna have your supply and demand levels. You're gonna have, it's all the same. It's all the same stuff, And if you are using an indicator, please make sure that you know what you're doing with it, and you know what it's telling you, and you know how to use it, and does it lag? Test it out. And see if it's doing what it's supposed to do. You know what I mean? And don't rely simply on indicators. Just don't do it to yourself, because it handicaps you. It's not going to make you profitable, guys, if you don't know what you're doing with the indicator. Okay. With me using price action, being a scalper, the reason why I stick with it is because it works. Everybody trades differently. Everybody comes up with their own trading style. Somebody could teach you how to trade, and you learn how to trade just fine. But you're always going to come up with your own style. You're always going to come up with your own way of doing things that work, your own way of seeing the market, seeing how things play out for you, and you decide off that. Okay, so I'm not going to sit here and tell you and judge you and tell you how to trade and what to use and what not to use, but I'm trying to impress upon you guys that trading is already very difficult. And any little bit of advantage that we can get, we want to get out of the market, because it's so hard to profit from the market because it's so unpredictable. But my thing is, people that say that indicators are so great, indicators are like the best thing ever, and if you're not using them, then you're not a real trader, or you're not doing well enough. To me, it's like, how can you say that? Because if these indicators were so good and so profitable and so easy and so like cut and dry, then everybody would be a trader, because the indicator would just tell you what the market is going to do, right? The indicator is going to tell you what the market is going to do. So what's the point of analyzing? Just sit back and let the market tell you what it's going to do. Let the indicator tell you what it's going to do. Let the indicator tell you what the market is going to do, not the other way around. If that was the case, everybody would be sitting pretty, making hundreds of thousands of dollars every single day in the market, because we have this handy dandy indicator that's going to tell us what we got to do, or what the market is going to do, and how to trade, and whether to buy, whether to sell, or to sit back. All these people that come out with these algos and just, it's a money grab. It's a scam. I don't believe it for 1 second, because if it was that easy, everybody would do it. Everybody would make money off of it, especially the big banks. If anybody had an algo or a special indicator that's going to tell you everything the market is going to do, when it's going to do it, how it's going to do it, man, you would be a gajillionaire, because every banking institution, every hedge fund, every financial market, everybody that's controlling, all of the entities that are controlling the financial markets will be begging you for your expertise with it, because everybody's trying to make money out of these markets. Everybody. So if you guys think that there's some cheat code out there or some secret indicator, or you know, it's not, it doesn't exist. Okay, it doesn't exist. Nobody is gonna tell you they have the secret to trading the markets, whether it's forex, whether it's stocks, options, futures, any of that. Nobody has a direct answer to that. There are a lot of people that are good at it. There's such thing as market makers, but even they don't know what the market is going to do at times. There's too many moving parts, too many things that are involved that control what the market does for any one person, any one corporation, one entity, one freaking indicator, or one algo to know what it's going to do. It just does not exist. It doesn't work that way. To me, the best indicators that exist are what's in front of you by itself. Naked charts, naked price action, naked everything. I don't even know how to take these indicators off my chart. I'm gonna have to figure that out now. I don't know how to take this stuff off, but I'll find out somehow. Oh, here we go. Remove indicators. Okay. That's how much I don't use indicators. I don't even know how to take them off my charts once I put them on. Okay. The best indicators, guys, are price action, market structure, naked charts. Okay. Who doesn't like stuff that's naked? Okay. Naked charts. Simple. Okay. You look at the candles. You see what the candles are telling you. It's price action. Where is price at right now? Where do you think price is going to go? Where do you see the market going? Do you want to, if you want to, throw a trend line in here, there's nothing wrong with that. Nothing wrong with, some visual aid to help you better, see what the market is doing. Nothing wrong with that at all. But when you start relying on it and you start depending, running your trade off of that, then you have a problem. You're going to take this trade and say, well, the market's going up. It's bouncing. The more it bounces off my trend line, the stronger it is, and it's going to keep going up. But what happens if the market breaks down? What happens if you take a buy and the market breaks down? Okay, you take a trade in here somewhere and you're bouncing around. Let's say you got in on this engulfing here. Right? This candle broke above all these highs and continued up. What did it do? It ranged right here. This is a little mini range. Even though it's still moving up, it ranged. Came up, and you're going to stay in this trade, and boom, it drops. And you have to, if you're a swing trader intraday and you're catching a bigger move, you have to basically hope and pray that price action and market structure maintain their movement and continue up. But if it doesn't, for whatever reason, now your profits go back down to zero or back into drawdown and you get stopped out. Okay, so to me, is it really worth it? I mean, I don't know. Everybody trades differently. Everybody sees differently. To me, it's not at all. To me, I think it's very stupid to take a trade and be deep in profit, and then just because you just want to catch a big move and you want to be so right about your trade, you let it go to where you want your take profit to be, not realizing that you have no control over the market. You don't know what the market is going to do. All you can do is analyze, trade. Analyze, trade. And if you're wrong, you could lose everything. You could lose all of the profit that you made, all because you want to be right and you want to catch a big move. Why take a swing trade and try to catch a big move when and try to, whatever, maybe it's your profit, maybe it's your ego, I don't know what it is you're trying to prove by catching a big move, but I don't understand why you have to put yourself through that type of grief and stress when you could easily plan a smaller trade and make even more profit, or maybe a little less profit, but at least you know that for that small bit that your analysis was right and you were able to win in the markets. 90% of people fail at forex. That's not a made up number. That's to me, it sounds pretty accurate, because even through my journey of trading and learning how to trade, I probably quit about 10 times. And when I say quit, I mean like got so upset from the charts and from the trading and learning and getting frustrated at things that I just walked away from it for a day or two. But I couldn't shake it. I couldn't leave it alone. I couldn't get off my mind. So I never really quit. I was just upset in that moment. But the vast majority of people that get pissed off like I do and leave, they don't come back. They leave and they're like, nah, this is not for me. I don't have any more money to blow at this, or I don't have the patience, I don't have the time, I got other things going on in my life, and it's just not worth it to me. There's other businesses or other opportunities out there to try to make some money, and this just isn't for them. And it's really not. It really isn't. And the number one culprit in that is selling people a false dream of the fact that Forex is easy. Forex is easy, you know. You don't have to work too hard, don't have to study too hard. You know, you could use a bunch of indicators. You could take some signals here and there. You know, it's a walk in the park. Anybody could do it. Anybody could do it. Anybody cannot do this. Okay? If you put in the time, put in the effort, have the mental fortitude to stick with what you're doing, you will succeed at it. I think you will. Some people just don't get it at all. I had somebody message me today in a group that I'm a part of and tell me that, you know, he's been trading for, I think it was like 2 years now or 4 years, a couple years I think it was, and he's still not profitable. And this guy has been studying every day, trying to, you know, or he says he has, I don't know, every day. And he hits me up every once in a while asking me for help and stuff, and I don't mind helping, but if I'm trying to teach you a simpler way of trading and you're stuck on indicators, then I don't know what to tell you, because sometimes some people don't see the error of their ways. They're kind of stuck in what they've only known, and pulling them out of that is very difficult. And I'm not going to take the time out to pull anyone out of anything. Either you want to do it my way or you don't. So when it comes to trading and using indicators, I would never tell anyone not to use them, because everybody has a different experience with them. But for me, I just found success in not using them and using the ones that the chart gives me. Okay, like my you know, support and my resistance up here and my support levels down here, like my price action and my market analysis. So that's pretty much it for this video. I don't want to make it too long. I just wanted to give you guys an example of some indicators that people are using, why you should use them if why to use them if you're good at them, and to not continue to use them if you're not finding success or you're not understanding them enough. There are a lot of YouTube videos online that do a great job of describing how to use indicators and how to place them properly on your charts and all of that. But for me, it just didn't do it for me. Didn't find much consistency with it. So that's my video for today, guys. Just decide whether or not you want to use indicators. If you do, try to get good at them. Be good at them before you start throwing money and depending on them. Don't depend on them if you can. Don't let the indicators handicap you to depending on them, because they're not always right. They're not always right, and neither are you. So that's it for today, guys. Please, if you like the video, don't forget to like, subscribe, drop a comment, drop any questions that you guys might have. Follow me on Instagram. More than happy to help anybody that is having a difficult time with Forex. Dropping a course in a couple of weeks, which should be I'm very excited about. It's going to be just about how to trade price action, how to trade my scalping strategy. Had a 10K day this week and backed it up with a 22K day the very next day. So I'm not leaving the way I trade at all, because I'm doing really well with it. So I don't see any reason to deviate from that. So if you're someone that's having success with the way you're trading, then by all means continue with it. If it's using indicators, man, do your thing, and disregard this video because it's not for you. But the ones that are struggling with indicators and feel like you're having a difficult time learning how to trade and you're using indicators and depending on them, that's probably why you're still having a hard time trading. It's because you're depending on indicators, and they're not always the best tools. Okay, guys, so that's my video for today. And thanks for watching, and I'll see you guys on the next one.